Hello and welcome to this latest IJ Global webinar. Today I'm talking to Neale Marvin, Managing Director at DC Advisory. We're here to talk about DC Advisory in light of it having won the Global Trophy for Financial Advisor of the Year in the IJInvestor Awards 2022. This was a particularly impressive victory for DC, given it was up against strong international competition, but our independent panel of judges was won over by the DC submission. One judge kindly described DC as an exceptional performer in this space. You can't say much better than that. Over the course of the judging period, DC's infrastructure team completed 28 deals valued at more than £12.8 billion across three main products of sell-side, buy-side and debt advisory. Neale, welcome to the IJ Global webinar.
Hi Angus, thanks very much for having us. I'm looking forward to the discussion.
Excellent. Okay, so first of all, congratulations on winning this coveted award, IJInvestor Financial Advisor of the Year for 2022 in the global category. How about starting off by running us through your high-level successes in 2022?
Sure. Okay, so look, I think, as you said, 28 deals, I think is a record year for us. We're 10 years old this year as well, so on the 5th of March.
Happy birthday.
We didn't exist 10 years ago, so we're super proud of where we've reached to. If you look at the deal sheet for this year, I think, the strength of DC is always that we work across the spectrum of super core all the way to core plus across the three products which you've mentioned. But I think three strongholds or three areas where we've always been particularly strong traditionally is around the district heating sector, around the storage sector, and around the rail sector. So a couple of highlights, I guess, in the district heating sector were obviously the M&A and debt advice that we gave to the consortium on Stockholm Exergi. We also helped another set of clients buy the Fortum Oslo Varma transaction, and both of those were obviously multi-billion-pound transactions within that space. And obviously, Scandinavia remains one of the most active areas in district heating. So we feel we've done pretty well there. On the refinancing side, we continue to, be one of the market leaders in the storage space. We helped the owners of EVOS and also the owners of LBC with some platform financings for both of those transactions within the year. And then in the rail space, Amewa is a key one, both on the debt and M&A side alongside our Paris colleagues, and the refinancing of cross trains again, which is something we're all aware of in the UK. But probably, Angus, there are many more because it was 28, but I think those six probably stand out.
Yes, all of them very impressive transactions. Okay, so thank you for that. Can you now take some time to give us your view on deal outlook, given the macroeconomic background and your expectations for 2023? And if you can separate that into the two key sections, M&A and debt.
Okay, so let's deal with the easiest one first, which is debt. So, throughout the volatility and the macroeconomic backdrop we're experiencing at the moment, we have luckily seen the debt markets remain open within our particular space. Obviously, the decision making for the clients is around the high interest rate environment and whether they want to transact or refi. I think fundamentally next year is going to be a year where people are going to need more advice on the debt structuring and more advice on the execution. And so we feel very well placed. If you think also, just going on to the M&A side a little bit as well, if you think also about probably where the funds are, I think we're noticing our outlook on the M&A side is probably that inevitably there are going to be slightly less transactions in the market next year. What that means is that people are concentrating on their portfolios, and within those portfolios is the capital debt financing solutions, and therefore we feel we're going to be particularly busy with our core clients, probably around some of their existing portfolio companies on the debt side. Markets remain open, liquidity is still there, both from the institutional market, both in the US and in the UK, and the banks. I think underwrites are going to be difficult because obviously banks are very nervous, and the types of underwrites that banks will want to do might not be the types of underwrites that clients want to do because of flex situations, etc. So cautiously optimistic going into next year on the debt side, albeit at a different point in the market than we've had previously. I think we've experienced over the last 10 to 12 or the last 10 years, say, a progression of the debt markets and clients getting what they want from the debt community. I think what we're seeing now is that the debt community is very looking at, it's not just looking at the pricing, but it's looking at also the structural terms, and therefore you might see a slight shift back towards back in favour of the banks and the institutions rather than the clients going forward. But again, nothing different to what we saw back in 2007 and 2008. On the M&A side, certain sectors will remain extremely attractive. Anything that's inflation linked revenues, we see as being flight to quality. The good thing about infrastructure predominantly is, working in an institution that has the infrastructure capabilities, but also the PE capabilities, is infrastructure is a great hedge to recession, and therefore, you have elements of our market which will remain extremely attractive. When you start getting onto the core plus end of M&A, I think that's where there'll be question marks about whether, people fundamentally truly believe the infrastructure thesis around those, and therefore you might see less activity. The only thing I'd say, Angus, as well, is actually thinking about that core plus end of the spectrum. The PE market is relatively closed at the moment, and what I mean by that is there is no term loan B market, high yield market, and therefore the debt funding for those transactions by the PE guys is actually becoming more difficult. So actually that might create opportunity for the infrastructure funds, actually, because the infrastructure funds can get the funding. So ever the optimist. We're going into a recessionary environment, a high inflationary environment, but we do feel that that there are still going to be plenty of stuff to do on the M&A side. The final point on the M&A market is, which we're already noticing, is there is already that disconnect happening between a seller expectation and a buyer expectation. So the last theme going into 2023, I think, is we feel that M&A transactions will take longer to those views, and that's already happening with processes in the market at the moment, which traditionally would have been done in a very tight timetable in a competitive environment. I think you're going to start, shift out 2, 3, 4 months on transactions.
I think you're right there. Okay, thank you for that. Can we take a look? And it is a challenging economic environment we're in. But can we take a look at DC Advisory's expansion ambitions? Are you looking at new geographies?
Yes, we are. Two things. I think there's the continued growth within the European franchise. If you look at where we are now, we're 70 professionals, I think, throughout Europe on the infrastructure specific side of things. So I'd say we're one of the largest teams in the scene, and the European ambition is to continue to grow that business. We've opened offices in Benelux. We continue to add capability in Milan and in Madrid, with already strong offices in Paris and in Frankfurt, alongside Poland. But I think where am I spending quite a bit of time at the moment is also focusing on building out our aspirations in the US market. And if you think about where how did we set ourselves up in DC originally, it was to follow our core clients, through sector and through geography, and a lot of our clients are now, allocating more and more of their resource and more of their fund allocation to US dollars, and therefore, we don't have that capability on the ground at the moment. So that's something that is something that we're going to address in the coming year.
Okay. Well, that sounds exciting. And Neale, thank you very much for taking time to join me on this webinar. And once again, congratulations for your success at the IJInvestor Awards 2022. Thank you.
Brilliant. Thanks, Angus. Bye-bye.